Good evening, Captain Retired Matt Edwards here with the next installment of Observation Post Facebook Live Weekly Update. Earlier in the week, don't know how long I'll be, I might not do it for the usual time. Earlier in the week I had to have a tooth pulled. I was eating a bit of lunch and then I thought I chewed into something from the cookie I was eating, and it turned out to be one of my teeth. It broke off. Now, it was supposed to be extracted in September, but, I decided that it wanted to come out early. So I got in that very same day on Monday, and here I am. Still a bit sore, so. And it makes my voice sound weird to me, at least it did at the beginning. So I don't know if it's the echo or the difference in having your teeth in your voice and the way you perceive it or whatever. So, what I think I'll do is do 4 issues that I listed on my list of potential, things that I've noticed. And then I'm going to read off a post I did today about why estimation is so bad. Estimation of Canada Pension Plan Disability. Now, I was also on VOCM with host Patty Daly, to give him a shout out, earlier this week. And I posted that onto my Observation Post videos and audio group. And I put in there the time I'm at, roughly. So people don't have to listen to the whole show. They can simply go to the point I was making. So carrying on. And I'm feeling a bit loopy, to be honest. I just woke up from a nap, and sometimes I feel a little bit strange after a nap. I get my thoughts together. Anyway, without further ado, number 304. Can we give a specific direction under the National Defence Act, Section 39(1), to the Chief of Defence Staff to stop Canada Pension Plan Disability estimation? Now, my idea here is one from 2015 where I sent a registered letter to the Chief of Defence Staff and I asked, under the law, and to set the table, to set it up correctly, I did a poll online, a petition. But it wasn't really a petition. I got the people who sign it to basically give me their agreement to act in their interest. Because I didn't want one contributor making a demand, a specific direction to the Chief of Defence Staff, but I presented the idea of these many people agree with me. These contributors want this to happen. Because that's what it says, that's subject to a specific direction from a contributor. The Chief of Defence Staff is the one who decides what to do with non-public property. Now, the Service Income Support Insurance Plan is non-public property, NPP, versus public property. Now, I can't help the way my mind works. And in the Department of, what's the name? The Judge Advocate General's manual I found, they said that non-public property was a special kind of public property. Now, I've struggled with cursing every now and then, but them JAG lawyers can go fuck themselves, because the name says it all, okay? Public property is government property, and it's held in trust for the public, and they can do what they want with it. But non-public property is when the government is holding other people's money for their benefit. So it's not the government's money. So I don't care what the JAG lawyers said, they're wrong. So this is why the people who made the money contributed to the money. Like insurance is set up, people put money into a pool of insurance and then claims are paid out of the pool. So the contributors can ask that the Chief of Defence Staff act in their interests. It's a form of democracy in a way. So I was thinking, seeing how evil estimation is, it's described in the 2003 Canada Pension Plan Disability Study called Listening to Canadians. They call it unconscionable. Well, if it's unconscionable, which means shameful, it means it's evil. So the government shouldn't do it, and the Chief of Defence Staff should not do it as well. Now, my idea is if you don't know the way it works in the government, in a democracy, we delegate our power by vote to the government. Then in Canada's parliamentary democracy, instead of a republic democracy, well, they set up a cabinet. So the Minister of National Defense is the one who gives their delegated power to the Chief of Defense Staff, and the Chief of Defense Staff gives his delegated power downwards until it gets to Manulife, who acts on behalf of CISP Financial Services, which is an entity under the Chief of Defense Staff. And then they order people who might have been hurt in service, but they might have also just become disabled naturally, ordinarily. And in order to save money for the taxpayers, they demand that they get the Canada Pension Plan Disability. And I've seen at least one example where they wanted to estimate the Canadian Forces Superannuation Act pension, which is totally insane. The industry does the Canada Pension Plan all the time. But I've never seen not one example except that one person, that one veteran, a female veteran from Newfoundland, where they said they were going to estimate her Canadian Forces Superannuation Act pension. Now, because I'm a little bit woozy and whatever, and my jaw is a little bit sore, number 305, Granovsky, Supreme Court of Canada's 2000 case, stated that the certification of disability is a benefit. Well, I say it's a liability. In some cases, maybe most cases. So, although if you have nothing else, then you become disabled and you contribute it to the Canada Pension Plan, and then you become disabled and you get that and you have no long-term disability, you have no pension. Well, the Canada Pension Plan Disability is a benefit. But you really paid for it already, so I don't even know if I can call it a benefit. But, you know, you get money that you didn't have before. But in cases where they take it into account more than once, or twice, or 3 times, it's a liability. For example, I had $2,650 that I had in clawbacks from 2 different pensions and 2 different insurances when I received the Canada Pension Plan at about $1,000, which put me down $1,550 a month, and that's definitely a liability. Now, I also had $14,351 paid me in a retroactive lump sum payment, and I got assigned a debt by the 2 pensions and the 2 insurances of $39,000, which is $25,000 in the hole. Now, to me, that's a liability. You can't sugarcoat it. You can't say it's not a liability when you end up owing more money than you got. It's a liability. It's a bad thing. Now, I could wax on all day about that. I might tell you a few examples, and I probably should, but I'll leave it for now. So my eyes are feeling a bit strange too. Bridging double tax. First, a clawback due to the Canada Pension Plan is a tax because I saw it in the Finance Canada tax expenditure report from 1998. They said that clawbacks are a form of taxation. And then after they tax it once, they then tax it again under the Income Tax Act. Now, Canada has a principle against double taxation. They are not supposed to tax something twice. If you tax something via a clawback, then you cannot tax it under the Income Tax Act. That is the rule. Landry, Tax Court of Canada, 1998. The same thing applies, by the way, to CISP long-term disability. They tax the premium when it's included in the soldier's salary, and since 2013, the government put a tax on the insurance premium paid by employers. So, you can't tax something twice. If you get taxed on the premium, you can't tax the benefit. Now, number 307, and after I finish the 4 points I have here, I'm going to look through a post I made to Facebook today. It's fairly long, but it waxes on and on and on about that stupid fucking estimation shit. A VAC report on rehabilitation used prisoner rehabilitation as a comparison. Now, I think I spoke about that before. And I often thought about, before I saw that report in 2019, that was when the report came out. I don't know, I think I saw it fairly soon after. But I was always thinking, prisoners need to get rehabilitated, and then lo and behold, Veterans Affairs Canada compared, how Corrections Canada, how their case managers, because of the rehabilitation program, and how prisoners were rehabilitated and case managers supervised the rehabilitation. They compared that to how veterans get rehabilitated. Now, I offer a piece of advice to the people doing these reports. I think if anybody watches this, they would agree. We'd be better off if they hadn't put that comparison in there at all. You found another department in the government that deals with rehabilitation, that's one thing. Compare something that might be similar. But don't compare people that were hurt in service to Canada, then they became disabled. Then they had to go through rehabilitation. Don't compare them to someone who broke the law, ended up in jail, and then had to be rehabilitated in order to join society. Don't go there. Don't even try to go there. Don't even entertain the fucking idea, you son of a bitches. Oh, there I go, getting upset again. But I hope you see my point. I think that's unconscionable, to borrow the word, and to be honest, I had never thought to use it as much until I searched the Hansard, and by the Christ, if they use that word all the time. Maybe other people don't use the word in everyday speech, but it seems like politicians like the word unconscionable. Now, I'm going to close my document with the numbered list, and I'm going to look at a long post I put there today. I've been trying to limit myself to 1 or 2 posts a day, and I thought to myself that I'd punch in this one here as like and I can't help it. Look, I got obsessive compulsive personality disorder, which is a terrible affliction. You want everything to be perfect. While many people would like a simple point, I'm here thinking this could be important, that could be important, and it pops into my head, and I feel it's not finished until I put it out there, especially if something never happened to me, nobody else might think of it. So, I said I just finished a long post or a possible column, but I'll post about one major point here. And then I talked about Sun Life a bit. Sun Life, which I have from my work with Canada Revenue Agency, where I worked as a tax collector, a payroll tax collector at the end, so for a good number of years. So when I talk about things like about payroll taxes and contributions, well, I know from experience and later research about those points. Sun Life has an estimation clause in it. Now, seeing I mention it, I might as well read it because CISIP doesn't have this in their policy. Sun Life reserves the right to reduce the monthly benefits of an employee. Notice they don't say former employee, because you got to be out of the civil service. Well, not really. You can be on leave without pay, but CISIP policy had to be out of service, according to its estimate of the amount to which the employee would be entitled. Well, number 1, if the employee's application for retirement on the grounds of disability under the Public Service Superannuation Act were made and approved. Okay, so here's where they do what they tried to do with Ashley, the veteran for the Canadian Forces Superannuation Act. So evidently, Sun Life wants to do that too for the public service. So I guess that's not as strange as I thought. I'd never read this policy clause before, despite the fact I've known it was there. Just knowing it was there, I didn't look at the particular details. Number 2, if an employee's application for benefits under the Government Employee Compensation Act or any Provincial Workers' Compensation Act were made and approved. Now, this is especially evil. Sun Life is a non-indemnity and contributory long-term disability, just like the Service Income Support Insurance Plan and Great West Life for the RCMP and the Industrial Alliance Plan for the non-unionized workers and members of Parliament. Workers' compensation is like the Pension Act and a lawsuit and tort, and that's compensation for your injury. So you can't compare the two. One is a capital payment to replace a capital loss, and the other one is a non-capital payment, a non-indemnity, a non-tort, a non-workers' compensation payment. And they want to take your bodily replacement, your make-whole payment, and reduce your insurance that your premiums were supposed to take. Number 3, if the employee's application for benefits under the Canada or Quebec pension plan were made and approved. Now, made and approved is a common theme, and in the Service Income Support Insurance Plan, what they do is they say in section 24 and 44A, the primary monthly benefits payable to the member under the Canada or Quebec pension plans, including retroactive payments during the period which such benefits were pre-funded. Pre-funded. What the fuck are they talking about? Pre-funded. They're trying to make it appear as if you get an interest-free loan, which is insane. So, but they actually convinced the government that this was true. They convinced the government that while you're waiting for your Canada pension plan disability, we'll make a loan to you, an interest-free loan, which, by the way, nobody does. If you go borrow money from a bank, you pay interest because that's their compensation for loaning you the money, the risk of loaning you the money. But the idiots in government, or they were in on it, bought the pack of lies that they were going to give disabled people an interest-free loan, and that's the way they worded all of their policies and their bullshit. Okay? So, moving up again. Point number 2. Sun Life is really the government's Canada in the case of Policy 12,500G, just as it was for the Canadian Armed Forces and the RCMP in the class action from 2012. Now, I can't believe I have to keep saying this point. But why I'm saying it is that I said this to Sun Life in a letter a few years ago, and recently I've been going through my old letters in Google Pictures, photos, and in one of the replies where I had accused them of being administrative service only policy, they said, oh no, this is not an administrative service only policy, this one is insured. Now, they seem to think that you can't have an insured administrative service only policy. But in 2012, there were 2 cases that were going before the courts, the Great West Life Plan for the RCMP and the Manulife Plan for the military. And in both cases, it was Her Majesty the Queen that was sued. It wasn't Manulife or Great West Life. Now, you don't have to go any further than that to prove that these policies are administrative services only, where you get paid to process the paperwork for the person who's actually the underwriter. Now, if I had to go any further, I'd quote from the case, which I will. And Justice Robin Burns from the Manouche case said that Manulife is the commercial partner for the Chief of Defense Staff, and that they get paid in, anyway, I saw that in the Office of the Auditor General about the 2005 file report about the RCMP's plan, and they get paid on a per-case basis for processing the paperwork for the RCMP. Now, the superintendent of the RCMP said he didn't know they had legislative authority, the constitutional authority, to administer the plan. And he's right, because insurance is provincial and the RCMP is federal. So, you can't insure the RCMP members legally. You can't. So why didn't they check into the military's long-term disability under the Auditor General? I don't know. Now, number 3, Canada replaced the Canada Pension Plan Disability Report in 2003, stating that the estimation was unconscionable, which I put in brackets shameful. I did that because there's the notion of unconscionability in insurance law as well, and I think they meant just in general terms about it being shameful. It shouldn't be done because you have a conscience, and this is so evil, you shouldn't do it. Number 4, Canada Pension Plan told me I was not eligible for Canada Pension Plan Disability on 26th of July 2013 because I did not meet the 4 out of 6 year contribution rule. I misspelled that. I'll fix it later. a legal technicality. Now, what I put that in there for is because they ought to be going on rules of equity law and not legal technicalities. Because pensions are supposed to be governed by equitable law. Number 5, they used that against me in March of 2014. Before I was approved in Canada Pension Line Disability at maximum rate, they said was $1,236.35 back then, even though I only had 21 out of 47 years necessary for reaching the maximum. So Canada Pension Plan Service Canada puts out this figures every year. They publish them so everybody can see. One of them is the flat rate, which changes. But they also published a maximum rate for the Canada Pension Plan Disability, which you have to serve with an employer for 47 years to get. Now, I submit to you, the viewer, if there are any, no one can get that. So the government, through Service Canada, is facilitating the fraud of our Canada Pension Plan. Because they publish this rate so the insurance companies can use that against us in estimation. There's no other reason to publish that figure. Tell me I'm wrong. What other reason could there be for the government to publish the maximum rate of the Canada Pension Plan Disability when no one can get it? They're trying to help the insurance industry out and the employers, of which they are one, an employer. Now, this resulted, and I used the words from the 2003 Canada Pension Plan Disability Report, this resulted in severe financial hardship for me. And I don't have to prove that, as it is self-evident as my insurance dropped $1,236.35 without the Canada Pension Plan Disability at that rate to balance out the equation. So in order to get savings, and you don't know you're going to get approved, they take the money off, and if that was your only money that you had coming in, and say the Canada Pension Plan Disability was the only, well, say it wouldn't be the only thing because you're getting the insurance. So you had the insurance, and then they wanted you to get Canada Pension Plan Disability. Well, you'd be down that money while you're waiting to see if you got approved. Now, if you have a balanced budget, I mean, think about it. You only get a percentage of what you did when you were making money. Like, so Sun Life is 70%, SISIP is 75%. So I was getting 70% of my pay, which is already a 30% reduction from my pay when I was able to work. And they decided that they were going to take a significant chunk of that and then reduce it further to penalize me, to punish me. Now, I think that, again, I'm wearing out the word, but that's unconscionable. Number 7, this is a point I'm always trying to stress, trying to get this crap fixed. So I did it again. The Canada Pension Plan Disability is made up of a flat rate in the economic portion. The flat rate should not be clawed back due to public policy, as the benefit is meant for the disabled Canada Pension Plan contributor. $457.60 was the amount in 2014 for me, whereas the Canada Pension Plan Disability was approved at $1,070.94, resulting in an economic portion, by my calculations, unless I made a mistake, of $560.34. This is the only amount that they ought to be able to claw back, in my expert opinion. So, here's this scenario. Let's say they found a way to convince a court that this was okay. Well, I don't think they'll convince any court that the flat rate was meant for anybody but the contributor. Now, to back up my claim, I'd use the Canada Pension Plan Disability Report from 2003, and about the cost of living allowance being meant for the beneficiary is the way they phrased it, when they said that they didn't like how insurance companies were taking into account the full cost of living allowance adjustment for the Canada Pension Plan Disability, resulting in an erosion of benefits. So I can make the same argument by changing a few words to say that the flat rate is meant for the beneficiary, not anybody else. It's true, I'm not lying, I'm not trying to twist words, it's just a pretty goddamn good argument. Number 8, Canada should not estimate Canada's pension plan disability. It should lead by example. That's the way I'm putting it. Number 9, Manulife administered the CISIP policy 901-102 for Canada, Manouche Federal Court 2012, and the RCMP, Butte State Federal Court 2003, 12, oh, see the way my tongue is twisting because of my teeth being a little bit weird. And Butte State Federal Court 2012 has a Great West Life, GWL, a practice known as administrative service only policies, as one that looks to be an insurer, does not underwrite the contract. Now, underwrite means to take the risk of profit or loss. You take the premium. That is the compensation for you to take the risk of paying the insurance if you have to. Now, point number 10. Manulife estimated my Canada Pension Plan disability in 2015 to force me to let them claw back 50% with Sun Life, clawing back the other 50%, something not in either policy, so I refused to do so based on privity of contract. Now, privity of contract is a principle that only the parties to the contract are party to the contract, and it's no one else's fucking business. Now, Sun Life was taking 100% since March 2014, so I told Manulife to take a flying leap. Because it was already being clawed back, and I thought that very sensible argument, that even if I did tell them to go fuck themselves, they would have to acknowledge, respect the fact that I already have the money being taken into account by Canada on another long-term disability policy. No, they decided to put pressure on me to cause me extra harm financially by taking into account that had nothing to do. They'll tell me if they ever asked about me reporting them to the Royal Canadian Mounted Police for fraud. Of course it had nothing to do with me calling the cops on them. So, well, I hope my phone won't get knocked down, dog went under the desk. Sometimes you get snarled up the wires. So I'll try to finish this quickly and get the hell out here. Clear. So, therefore, point number 11, therefore Manulife and Sun Life placed me into severe financial hardship for their own benefit as they saved on the long-term disability payments, while I had to dip into my savings to survive, placing Canada at risk of punitive damages one of these days. That's what I keep telling people. The government is letting these people at these insurance companies put the government at risk because Manulife and and Great West Life didn't have to pay a cent in those two cases I mentioned. Not one copper. It ended up that the Crown had to pay. So somebody else puts them into trouble, puts them into legal jeopardy, and then the government has to pay, but the company that put them there don't have to pay. That don't seem right to me. So if I ever do get a lawsuit on the grounds, I'm going to try to make it a joint and several one against the company. And some people might say, well, that's the point of administrative services only policies, to limit the liability for the people doing the paperwork. Well, I'm sorry. There's also, you have to be responsible for your own actions. The Chief of Defense Staff has probably not given them explicit directions to estimate the Canada Pension Plan disability. Manulife is acting on their own. They're doing what they would normally do to anybody else. So they had to be held responsible for something, or, well, why would they ever stop? Now, number 12. Well, I know many people might say something like, how much money did your wife make? That's not relevant. Both Manulife and Sun Life cannot ask me about anything other than me. It just hit me that this ought to be the main point for the child pensions being clawed back by CCP and the Canada Pension Plan Children's Pension. Okay, here's my point about that. It seems to have been ignored by everybody but me, unfortunately. Remember that old CPPD thing? It's laser focus on some things. They didn't put it into the policy that they would take the Canada Pension Plan Disability Children's Pension, but they put in there that they would take the children's pension under the Pension Act pension. That's insane. Legally, there are 3 different pensions payable under the Pension Act that I know of. At least I'm trying to recall them. There's the Pension Act pension for the veteran. That's to compensate him for the loss of economic potential, akin to a lawsuit in tort or workers' compensation. But if he's married, there's a spousal pension, and that's the property of the spouse, not the veteran. And then there's the children's pension if they have children. Now, as much as Veterans Affairs puts all that money into one payment to the veteran for administrative simplicity, legally, technically, it's the property of the other person. So Manulife, and before them Maritime Life, before Manulife bought them, they were acting on behalf of the government of Canada, and they took the children's pension and disposal pension, I presume, too, but I think they might have only listed the children's pension. In fact, let me read it out so you don't talk about it. The total monthly income benefits payable to the member under the Pension Act, and then in brackets, including dependent benefits. So they covered the spouse and the children. Dependent benefits, payments covering the retroactive period during which the benefits were pre-funded under Division 2. So they did the exact same thing. So they covered both the wife and the kids, and they said dependents benefits. They considered that to be income, and they clawed it back from the service income support insurance money. Now, I mentioned this before, but I'll do it again just in case. Although the Dennis Manouche and the Butte estate class actions settled the dispute between the veteran and the government, the spouses, the dependents, they still have a legal dispute because any settlement of the dispute was about the veteran, their clawback, not the dependents getting clawback. So I'd say that would turn out to be a pretty high figure. And they try to argue, of course, that we already litigated, this was already litigated, and we already paid damages, and this case has been settled. The government and the veterans representative, McKinnis Cooper, they signed the settlement, and they said that we will never sue on this issue again. Well, they didn't need to say that because that's the function of precedent. But there's no settlement for the spouse and the kids. There never was a settlement for that. They might have included those amounts in the settlement, but the veteran didn't legally own those payments. So if the government fucked up and gave them the money back in the veteran's name, well, the people who were really owed the money still have a legal lawsuit, legal issue, at least the way I see it. Now, the reason that I was putting this point in there is many people think this way. It doesn't matter what my wife made. I'm my own person. Canada has individual income taxes, for example, and in the States you file it as a family. Okay? So Canada seems to do everything or most things by individual basis. Not once did Sun Life or Manulife ask me what my wife made. In fact, as a point I'd like to stress, Sun Life clawed back my public service pension and CISIP clawed back my reserve force pension, but neither clawed the other one back in reverse. Sun Life left the reserve force pension plan alone because they knew Manulife had it, and vice versa. My public service superannuation act pension was not clawed back by Manulife because they knew Sun Life had dibs on that pension. And you see, that proves my point about the Veterans Wellbeing Act regulations, where they say that they list all these different things that can be clawed back, and they don't seem to realize that it has no bearing, no relevance to the matter. They list out the public service pension under a clawback, but that has no bearing on a military member who gets Canadian Forces pension. But they seem to think that it's okay to throw everything under the sun in there to reduce their expenses. It's just not, it doesn't work that way. Now, point number 13, pre-fund is a term CISIP uses that is absurd. Then they try to justify that they make an interest-free loan while we wait approval for a Canada Pension Plan Disability. For example, estimation shows this to be a lie, as they don't pre-fund in that case. Now, think about that for a second. Their claim, according to the CISIP policy in writing, they say that, we're going to claw back the Canada Pension Plan, including the retroactive, where we pre-fund your insurance, pre-fund you before you get to Canada Pension Plan. We make you an interest-free loan. Well, what about when they decide not to just wait for the person to get approved, but they decide to reduce the payment early, like they did in my case? They can't say that they were pre-funding the Canada Pension Plan then, were they? they took the money off before it was approved, which is insane, you know? Now, then I said I'm getting tired of this shit because I could have kept going. I mean, that's the problem with this stuff. I know so much stuff, it boggles people's mind, boggles my mind. But, I mean, I did up an estimate here of the flat rate loss. Just that one issue alone. And it's not accurate because I went forward with Manulife as if I would get it till age 65, but they cut me out in 2017. So the figures are going to be wrong because I included it up to 2019. But between the two of them, it was $58,439.84 they would have owed me if somebody ruled in my favor that the flat rate is off limits. There's no way you can justify the flat rate being clawed back. You want to make a play for the economic portion of the Canada Pension Plan? Well, go fill your boots, you can try it. But the flat rate is obviously meant for the disabled person. It was put in there from 1966. And they had I don't know if I call it a mistake, but, you know, I wonder if they paid the people back. But the Quebec Pension Plan disability had a 300% advantage over the Canada Pension Plan disability from 1966 up until 1986. In 1987, the government fixed it, and that, ironically enough, is the reason why we have all this trouble with Canada Pension Plan disability being clawed back, because of Mr. Michael J. Prince in a book he wrote that I found, and then I copied and pasted the page that was relevant to me. He said, and I'm paraphrasing, that the insurance companies in the provinces perked up when they saw that the flat rate had gone up so much. So my way of looking at this is the government is liable. They are the ones responsible for the damage that the disabled people suffer because they increased the rate. And and you would think, well, geez, they tripled the rate, they helped out the disabled. But no, they don't help the disabled. They help themselves. Because administrative services only policies are employers. Now, if you're the employer and you get 3 times as much money because they claw back the flat rate included in the regular Canada Pension Plan, well, now your long-term disability expenses have gone down, haven't they? Now, in the longer version of this that I didn't put here, I wrote up a column almost. I might play with it a bit and whatever. Think about the harm that this does to Canada's economy. Instead of you getting more money, because you're getting your insurance plus your Canada Pension Plan the way it was designed, and then you can spend it, and then because you spend it, government gets more taxes in the GST, and the people that you spend it at, they have employees, they get paid, and they pay income taxes. I mean, instead of that, they reduce the amount of money in the economy by clawing back money for their profits. That's not good public policy. That's bad public policy. That's antisocial. And it should be outlawed. In fact, it is. It is outlawed. Because in the Canada Pension Plan, in Section 65(1), it states that nobody can touch the Canada Pension Plan disability. Now, whether they debated it in Parliament or not, this is my final point because I'm a little bit dry here. Somehow, the government changed the law and they put an exception to the rule that you can't touch the Canada Pension Plan disability for the people that pay disability income programs. Now, the way I read that section of the law, it only applies to the retroactive portion, but the insurance companies, the provinces, and employers are acting as if it applies to ongoing payments. So they seem to think that because they put that legal section into the Canada Pension Plan Act, which first, by the way, did they consult the provinces? Secondly, did they debate it in Parliament, or was it just put in there as an administrative measure by, say, regulatory people, you know? They're changing the purpose of the Canada Pension Plan. The Canada Pension Plan in 1964, when they were discussing it, they said, for a small increase in the contributions, we've enriched the plan, and we're going to have a children's pension and the disability pension. We're going to increase that or do something about that or something. Maybe it always had a flat rate, but it was a pretty small amount. So the idea was they set up a comprehensive social insurance back in 1966. Now, another point I always make, and I'm going to make this, and then I promise I'll shut up. The employer and the employee at that time paid 1.9% for a total of, say, 4%, okay, 3.8. But the employee really paid all of it. They made it look like it was a payroll tax, but it's a contribution. Now, everything earned by the employee is the employee's property. So the employer sends both halves of the contribution, and it belongs to the employee. Now, as proof of that, if you were a self-employed person in Canada, you pay both parts, the employer and the employee part, and I'm damn sure they don't give you double the pension. Now, that's called passing on the cost. And in a Finance Canada committee in 1997, the future Prime Minister, John Martin, he was then the finance minister, he said that everybody knows that all of these costs are always passed on by the employer to the employees. So Peter Weiler stated that about a workers' compensation report he did for the Ontario government in the 1980s. He stated that the workers' compensation premiums were passed on to the employees from the employer by either A, putting them on the cost of goods sold, and then the employees are also consumers, so they pay the cost when they buy things. Or if they don't have products for sale, then they reduce the pay of the employees because they have this expense for the workers' compensation premium. Employers aren't going to eat the cost. They're going to pass that cost down to their employees and give them less money because they have to pay them the workers' compensation premium in addition to their pay. Now, the same argument can be said about the employment insurance, the pension contributions, and the Canada Pension Plan contribution. Now, on that note, because I'm not feeling exactly 100%, can I go back to watching TV or go to bed early or something? Thanks for watching, and I'll see you next week.